Welcome to the Techno Fundamental Report for July the 11th. John Kennedy, President Kennedy, we choose to go to the moon in this decade and do the other things, not because they are easy, but because they are hard. I think that's a great quote. We invest in the stock market not because it's easy, it's hard, but sometimes in life, things that are difficult are worth having. Speaking of that, Common Sense, Thomas Payne, 42-page pamphlet written back in 1776. And it basically said to the colonies, common sense, monarchies generally don't work. And human behavior much prefers a republic. So using common sense to get things done made sense. So common sense with me is that I'm of the opinion that we are in a very prosperous time right now. We hear all the negative news all the time. It's kind of like when I talk to my golfing friends, how's your golf game? Every time they're negative about it. My golf game's terrible. People tend to talk about the economy the same way. So this is real personal income, and you can see it's hitting a new high here. Remember, our economy is driven on consumption. So you can see that, here was the recession back in 2020, and we don't look anything like that. Then if we also look at just all employees, total non-farm payrolls hitting a new high, here is total non-farm private payroll employment. So it's not all government workers. So it's hitting a new high as well. Also, one thing about our country is we're educated. This is an educated population. In today's knowledge-based economy, what you earn depends on what you learn. Jobs in the information technology sector, for example, pay 85% more than the private sector average. So education is important. So everybody's worried about interest rates. It is a big issue, but look at where we've gone. Realize this is 1981. The Dow Jones Industrial Average was below 1,000 at that point. Now we're down, interest rates have come all the way down here, formed what's to be looks like somewhat of a normal period in a way. And the Dow's about to break 40,000. So interest rates are an issue, but I think we could be overreacting a little bit. So if you look at the fact the NASDAQ's hitting all-time new highs, this looks pretty prosperous to me. However, again, the mid caps again continue to be struggling in here. We did get a little bit of a bounce yesterday. Now the small cap, same story, but we did get a little bit of a bounce. Now what we really need to see is where these other indexes start really getting into gear with the NASDAQ and the S&P 500, because you can see here that with these indicators or these indexes, the S&P 500, the trend is up. The NASDAQ, the trend is up. So the primary trend is up. This is a bull market, no doubt about it. Now, over the years, in fact, back in 2022, when we were in the bear market of that year, interest rates went from basically nothing to 5%. So we had a major shock to the economy. And I introduced an indicator called the Copic Curve, which I just am amazed on how well this indicator has worked. It actually called this bottom when it turned up above zero here back in mid 2023. So kudos to the Copic Curve. I think we should keep it. Keep an eye on it. But right now we're making new highs, and the Copic Curve said here's the low, and it sure enough was. Let's take a look at some stocks now. I want to mention here I've got three moving averages. I have a 10-day moving average, I have a 21-day moving average, and I have a 50-day moving average, and actually four moving averages. Here's 200-day. What I think makes sense is to understand that when you match the price of the stock to a moving average, you say which of these moving averages, because I think these are the ones that are important. Which of these moving averages is this stock price the most loyal to, or the most consistently dealing with? So like here with Cirrus Logic, you can see it's just basically following that 10-day. Now, where this becomes important is that if you get a major break below these moving averages that seem to be so consistent, it could be an indication that the efficient market is telling you something is wrong here. So Cirrus Logic, you got a gap up buy signal here based on an earnings report, continued to move along this 10-day moving average, broke out again 2 days ago. Looks interesting. This is Corning. Now, Corning is an interesting company. They are into optical communications, which is fiber optics. And with these data centers, there's 11,000 data centers around the world, and they're all going to have to convert to hyperconvergence, which is artificial intelligence. So here we got the gap up on Corning. Again, you can see how it has faithfully followed that 10-day, but then all of a sudden there was a break. However, it held that 21-day and then broke out again. They pre-announced their earnings. Looks like the company's going to do quite well. Eli Lilly, another good example. Look how consistent we are here. Now, if you notice here, we had a little bit of break in here. Now, remember, it's not the news. It's how does the stock react to the news. Well, this is when it came out that Eli Lilly's drug for weight loss had issues with the eye, the human eye. And however, reports kind of came out the next day saying it's no big deal. So basically, it held that 21-day, and then it popped right back above that 10-day, and it's been making new highs. So using moving averages can really help you understand how does this stock react to the news. And I will say one last thing. Develop a chart eye. In other words, if you look at charts like I do, I look at thousands of charts, and you develop an eye for them. And it's a way to try to understand what is the market telling me, because the market's efficient. It has all the information. So if you have any questions, please let me know. Thank you very much.